Hello folks, this is Jason Kendall with SFS Wealth Management with our August 2014 Educational Economic Update. In this month's video, we'll be discussing some of the important events that affected markets last month to give you some insight into what they may mean for you as an investor. Also, please stay tuned at the end for my required disclosure statements. August was overall a pretty good month for the economy. Investors got their second look at second quarter gross domestic product numbers and are starting to think about what the rest of the year might look like economically. After a long, cold winter that caused economic activity to stagnate, the economy came roaring back in the second quarter. The latest estimate shows that the U.S. economy grew by 4.2% in the second quarter. This is the fastest pace of growth since the third quarter of 2013. Even better, the growth was spread across many sectors of the economy, indicating that this may not be a one-time deal. After many quarters of sluggish growth, the economy might be finally moving into a self-sustaining expansion as growth in one area feeds improvements elsewhere. Expansion in the labor market is feeding consumer confidence, which is translating into greater consumer spending, which will hopefully continue to stoke the economic growth. One place in which consumer spending has been visible is in the retail sector. Though the second quarter numbers were pretty lackluster for most retailers, the back-to-school period was a bright spot, hopefully portending greater consumer spending this quarter. Since back-to-school season is the second largest shopping period for retailers, it can often act as a bellwether of the very important holiday shopping season. Despite the fantastic GDP numbers, the news last month wasn't all that great. Personal spending growth unexpectedly declined in July, indicating that consumption was weak at the beginning of the third quarter. Since consumer spending accounts for nearly 70% of economic activity in the U.S., a decline in personal spending could be a sign that Americans are cutting back on expenses. However, the same report showed that household incomes grew during the same period, which could mean that Americans are simply saving more instead of spending money. On the other hand, consumer sentiment rose significantly in August as Americans cheered up and regained their optimism about the economy. One measure of the current expectation reached its highest level since before the most recent recession. So, if consumer sentiment is up and personal spending is down, what does that mean for the economy going forward? Well, it's hard to say without more data, but we can say that the underlying trends point to a sustained economic growth and improvements across the entire economy. Looking ahead, we expect the situation in the Ukraine to affect markets as investors worry about how deteriorating security and continuing sanctions will affect global markets. Although the U.S. economy doesn't appear to be affected by Russian sanctions, Europe's fragile economy is less able to withstand negative shocks. We'll know more next month. Well, that's it for the August Educational Economic Update. If you have any questions or concerns, please give our office a call. Once again, this is Jason Kendall with SFS Wealth Management, signing off for the month of August 2014. If you have any questions about what you heard in this update, or you would like to discuss your own personal financial situation, please give us a call at 765-453-3355. We'd be happy to talk with you. As for that required disclosure, while we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your personal financial professional before making any investment decision. Thanks a lot.